Welcome. My name is Jeff Russell, and I'm the CEO of Delta Dental of Iowa. This is an exciting time for the healthcare industry as we prepare for healthcare reform, changing the way people purchase and access healthcare benefits. While many of the reforms impact medical insurance, there are significant implications for dental insurance, such as the requirement for pediatric dental benefits. We're pleased our lawmakers recognize the importance of dental care and improving access for Iowa's children. As Iowa's largest and most experienced dental benefits carrier, Delta Dental is proud to support ABI and its members to identify the information you need to make informed healthcare decisions. Thank you and enjoy the day.
Right, and
translate is that there's a lot of evidence that there's been a damper on incentives for full-time employment. But I hear it is driven more by uncertainty about what the rules are going to be than actual knowledge of the financial impact between big versus small employers.
That is a big piece of it.
Is that a fair summary?
I would say so.
another planning approach that I've seen, discussed, I don't know if we have any clients actually doing this yet, but if we got further into this, the coverage to avoid, if you're a large employer, to avoid the penalty, you have to provide affordable health care. And affordable is defined as costing no more than 9.5% of the employee's household income, but that's for individual coverage. And it's pretty common for employers to pay part of the dependent premium also. We've seen some employers looking at shifting more of that to more of the employer money to the employee's share of the premium, and then more of the dependent cost to the employee cost. And and you need to look at that if you have. I know I think Sean had run some numbers at a prior conference we did. And in a lot of cases, I don't think a lot of employers, or many employers, will not have a problem with the 9.5% anyway. If your employees are paid reasonably well, you're probably not going to run into that. But if you do, that's one way employers are dealing with it. Rather than worrying about getting under 50, they're making sure that the coverage is affordable, because if you're providing the affordable coverage that provides minimum value, then you don't have a penalty anyway. For whatever reason, affordability is based just on the employee-only coverage, and you have to offer dependent coverage, but you don't have to pay anything toward it. And also the other odd thing on offering dependent coverage, that's children, you don't necessarily have to offer spousal coverage. So I haven't personally seen employers dropping spousal coverage and keeping kids, but it is an option.
You can't buy insurance just on a child. Nobody will sell it, you can't buy it.
Oh, you mean a child-only policy?
Right.
Yeah.
It's not legal anymore, so if you have, one employee that can only afford employee, and they can't afford family, it's almost being encouraged to say, there's gonna get a divorce, get on, DHS, get Title 19 to afford, to cover the children. For working class Americans,
The concern I've heard on that affordability aspect, and this is just anecdotally, but it's both from employers and employees, is that household income piece, because employers are reluctant to want to collect that
Right, yeah, and in most cases they're not.
to give it.
Exactly, and there's a safe harbor. There are a couple of alternatives there, and the typical one that you'd be, if you can use the employee's income. Chances are household income is higher, but if you can show that the premium isn't more than 9.5% of what you're paying the employee, that works. They did provide for a couple of alternatives you can use just exactly for that reason, because that's not the kind of information that employers usually have or employees necessarily want to share. Yes.
My understanding is there's at least one, if not more, companies that in Iowa that are looking at setting up a private exchange, or setting up private exchanges that would be much more beneficial than, because Iowa relented and said, well, we're not going to set up our own exchange, you're just going to go public, which would be more beneficial. What have you heard in that regard, and what are some of the potential positives of the private exchanges rather than either having your own, bronze policy, if you will, as a minimum, versus just going out to the public exchange?
Yeah, I've seen a little bit about that. In the private exchange, if people had, well, and this is sort of getting into Mitch's area, but if you had a premium subsidy or something, that wouldn't be available in the private exchange. You have to go to the public exchange to do that. I have seen a little bit about a private exchange, not very much. I don't know, have either of you
No.
seen?
I know that they're, in fact, the agent that I work with is building a private exchange here in Iowa. He probably won't be the only one who does it. It'll be something that agents do to offer an alternative, I guess, to the public exchange. There may be a host of reasons for it. Who will participate in the exchange, in the private exchange versus the public exchange, is gonna be an interesting question. Wellmark said that they're gonna be in the public exchange in 2015, but who is it gonna be in 2014? I don't think we know yet. I suspect that the co-op that's here in Iowa, Cooperative Health, thank you, will be in the exchange. I think that's maybe the only carrier that I'm aware of.
That's the only one that's announced so far.
Yeah, so far.
And Blue Cross Blue Shield is waiting a year so that they know what they need to undercut.
Exactly.
Or to know what the risk distribution is, because
Right.
one of the dangers is that the people who come into that exchange may have a very different risk profile than the people who have been traditionally insured. So pricing it correctly year one is going to be a big challenge.
It is a big challenge, especially if you lose your shirt and you still can't make more than 15% the next year.
Well, and
You can't ever make your money back for a carrier.
That's right.
They lose it, it's gone, and there's no opportunity to make it back.
You know, the theory of the exchanges is that competition will drive prices down. The problem for Iowa is that we are a near monopoly already. The only way that an exchange probably would work in our territory is if it was a multi-state exchange and you required the existing monopolies that exist in Minnesota, Iowa, Wisconsin, Missouri to compete against each other. That didn't happen. I don't have real high hopes for the exchanges having any contribution to cost savings.
So-
And I'm an advocate of value-based purchasing. It's the structure just isn't there to succeed.
I don't know that it is here in Iowa either. So the benefit on a private exchange might be different carrier availability. Now remember, the shop exchange was supposed to offer employee choice, that an employer in a shop exchange or buying a shop product was gonna be able to say, I want a silver level plans, and then the employees could choose from whatever carrier, whatever available plans that were silver plans from each one of those carriers. And what they said they postponed to 2015 was that employees won't have choice, that the employer will just pick a plan in gold, silver, platinum, or bronze, and that'll be the plan that'll be the only plan that'll be offered to those employees for 2014. That's a kind of a big change too. Well, what I just described before, if you had every carrier that was available in the exchange and for small businesses, everybody jumped in it, there might have been some decent risk sharing going on, but I don't think anyone was able to predict, to your point, how that risk sharing was going to occur, because if all the sick people went to Coventry and all the healthy people went to Wellmark, Coventry would go out of business. So it's trying to do all of this is very, very complicated. They stirred a hornet's nest, really.
I know the panel's focus is on helping us comply, not, we all have problems with the law, but the goal is to help people comply. And we promised people we'd stay on time today, so we've got about 10 or 15 minutes left. Mitch has done a great job passing the microphone back and forth, but
I want to hear more
some
from
other stuff too, so I just wanna make sure we stay on track.
Yeah, my information is just included with the handout, and I'll go through it pretty quickly. When we were conference calling in and figuring out what each of us were going to talk about, Sean had mentioned, and I put all this information together, and then as far as the insurer reporting requirements and the employer reporting requirements, and everybody was anticipating that this was going to be something that was going to come into play here in 6 months, and then lo and behold, as Sean mentioned, the blog came out on the afternoon of July 2nd. I remember because I was sick on July 3rd and then read my email when I got back to work on July 5th, and lo and behold, then everybody had it as far as the delay goes. But just wanted to let everybody know that basically there's two key pieces that so far, I guess, as we stand here today, are being delayed. I'm sure everybody's aware that there is scuttlebutt in Washington of trying to get a bill passed through Congress to get even more pieces of the legislation delayed, or the entire legislation delayed to 2015. So as with this law, I don't know about the rest of you, but I was surprised to see, I guess, this piece of it delayed, but we'll just have to wait and see what happens with the rest of it. But health insurance issuers, government entities, employers that sponsor self-insured plans are going to have to file annual returns reporting the information for each individual that's covered. And this is the insurers, so the Wellmarks of the world are going to be responsible for this. It is anticipated that if you have health insurance coverage through one of these issuers and you're not a self-insured plan, that the regulations are anticipated that it's going to make the insurer responsible for the reporting. And then, of course, every individual covered under the plan is going to be going to have to receive something for themselves as well. And then the statement that's going to be furnished to those individuals is going to have to be done by January 31st. So that's similar to when the 1099s and those kind of things have to be reported on. So that makes it January 31st. And then for employers, and the key piece to the second, I guess, main bullet point there down there is, as of right now, it's just those applicable large employers, those, that magic number again, those that are over 50, whether they're full-time employees or full-time equivalents, are going to have to file a return as well that's going to report the health coverage that are provided to the full-time employees. So you can read on there what the statement has to include, and once again, that statement's going to have to be provided to the employees by January 31st following the calendar year. I think this is a good part. I mean, I hope that part of the delay and part of what we see is that they're going to maybe combine these two reporting requirements.
If I'm a large employer, who do I practically delegate the responsibility of preparing that return to? My CPA, my third-party administrator, my agent? Who's going to practically do that for me?
I think the answer to that question is probably going to be dependent upon what the information is that's going to be included on the return. If it's something that you're going to easily have access to, you the employer, then I would think that it's going to be, your responsibility, internal. I know that we do, at Bergen Paulson, we do, payroll providing and monthly service work and client accounting work. So I don't know, depending on what the return and what the information is that's going to be disclosed, if that's going to be something that we just do at the end of the year when we prepare the W-2s and the 1099s. Is that just going to become a part of that year-end process? Like I said, I think a lot of it is going to be dependent upon what exactly the information is that they're going to want to require the employers provide to the employees and what the Internal Revenue Service is going to want to see. As I put there, the formal guidance is expected soon, and they're hoping to have the regulations on these reporting requirements later this summer. I find this last sentence, I had to chuckle and laugh as I actually typed it. Once the rules have been issued, employers, insurers, and other entities are going to be strongly encouraged to voluntarily implement this reporting for 2014. I know, right, exactly. If it's like anything else, I know one of the things that has been kind of kicked down the road, or kicked the can down the road, is the reporting of the health insurance premiums on the W-2, and it was a couple years ago, and then it was supposed to be last year, and then if you have less than 250 employees, it's until the IRS regulations come out. But you can, of course, voluntarily disclose that information if you want to. If it's like anything else that has to be voluntarily disclosed, it's not going to be disclosed. It's not going to be done. It's not going to be done by employers until they absolutely must do it. Probably just for the reasons that, one of the reasons that you touched on. What's the information going to be? What's it going to take to pull it all together? Who's going to do it? If I have to have somebody externally do it, how much is that going to cost me to put all this information together just to make it voluntarily? So like I said, I don't know how many people are going to voluntarily do it, but I guess we'll kind of wait and see. The second big piece of the delay that everybody I'm sure knows about is large employers are not going to owe either the $2,000 tax or the $3,000 tax for 2014. So the employer shared responsibility payments aren't going to come into play until 2015. Department said that its actions are not going to affect the employee's access to the premium tax credits available under the Affordable Care Act. And we were just kind of discussing this when we were eating lunch here. I guess one of the things that I've seen and one of the things we've seen is these credits or subsidies are going to be on the honor system. Now, how the IRS is going to pull together this information to see who qualifies for the subsidy or the tax credit without having the employer information, your guess is as good as mine. I have no idea how they're going to do that without having the employer's information unless the employer is one of those ones that does voluntarily report. So,
It'll be like low doc mortgages.
right, it'll be. I was kind of surprised that they decided to say that the employer shared responsibility payment is going to go 1 year down the road to 2015, but left the individual piece of it in there for this year, for 2014.
Do you know off the top whether that's a refundable tax credit?
The refundable to the employees that qualify,
Individual.
or to the individual, I don't believe so. I don't believe it is. I think it just basically can reduce your tax down to zero, but doesn't allow the employee or individual a refund for any sort of difference. I think it just takes it down to zero.
On the premium tax credit, the way it works is if someone qualifies and for 50% of their premium to be a premium tax credit, they will only pay the carrier 50% of the premium. So that they're going to get it real time, and the carrier subsidizes it until the end of the year, and then they true up with the government to get the money back.
So in the chicken versus egg scenario though, which has to happen first?
I'm wondering the same thing because they're going to base the way the process works theoretically is I go in today or in October and say I want insurance on the exchange and I want a subsidy. Here's my 2012 W-2s. I think I qualify. Pretending a mandate still exists. My employer doesn't offer affordable care or whatnot. So I get a subsidy all through 2014. But you know what? I got a big bump in my salary in December of 2013. I still get the subsidy throughout the entire year. There's going to have to be a true up, and they already have they've contemplated it because there's a cap on how much they can get back from the individual. I forget what the cap amount is, but if someone gets the subsidy and shouldn't have got it, they're going to have to pay some or all of it back. And then I don't know how it's going to work with the carriers. If I was a carrier, I'd be scared to death because if you're going to wait around for Uncle Sam to write a check for all those subsidies that you did, I don't think it's going to happen anytime soon.
So the key for an individual would be to take the maximum you can in the credit and not have to pay it back other than the maximum that they require you to pay back.
Could be, yeah.
There was just a note in the Wall Street Journal that the government is at least contemplating a contract with Equifax in order to do income verification as an interim measure or as a double check against the employer one. So apparently they're trying to figure out some way for income verification without the employer providing it.
Because in your particular example, it wouldn't be falsification of a document. You know what I'm saying? If you had a $20,000 salary and then the next year you had a $70,000 salary, it wasn't like you falsified it. You actually gave them your actual salary. That's interesting.
Yeah, but if you accept anything that you weren't supposed to get, you're supposed to give it back.
So we'll see how that one progresses. As we've already discussed, the announcement by Treasury is not supposed to have any effect on the individual mandate rules, and the healthcare exchanges are expected to be operational. Employers are required to send employees by October 1st notice of the exchanges, and so hopefully upcoming guidance is going to give us some more direction there. Just one small piece I wanted to touch on down there as far as the changes to the small business insurance tax credit goes. Just the one thing I wanted to make sure everybody was aware of, that beginning in 2014, the tax credit goes up, but it's only going to be available for those small businesses who purchase their coverage through the exchange, which since the exchanges were not in place in previous years, that wasn't a criteria for the credit, but it will be in 2014. And then the last thing on the final page there, when the employers are notified that they could be subject to a penalty, there is going to be an appeal process in place. But because of the fact that the employers don't have that reporting responsibility, this is something that employers probably are not going to have to worry about until 2015. But just wanted to make sure everybody was aware that there is, just because the exchange sends you something and says, well, one of your employees went out on the exchange and got their health insurance through there, and therefore you owe either the $2,000 or $3,000 tax. There is an appeal process in place, and guidance is supposed to be forthcoming, but it's, once again, because of the delay, it's probably not something that employers are going to have to worry about until 2015 as far as the appeal process goes.
Another general question, for somebody that ends up with 2 health plans, historically, health insurance is only paid up to the 100%. Somebody ends up with 2 health plans, will they be able to collect above and beyond the payment? I mean, they're paying the premium.
Good.
I'm shaking my head. I've never seen any type of insurance pay above what the claim is in totality. So mostly there's one would be primary and one might be secondary. So if it only covered up to this, the other one might pick up the difference. But I don't see, in fact, most insurance contracts would have something in there saying you can't collect twice.
Right,
That's
and I
the
don't think
kind of
anything in the
coordination
law has
that-
changed
Yeah.
that.
Okay.
Good question, though.
Is the primary still a firstborn in the year?
I'm sorry?
Is the primary in families that have 2 plans, is it still firstborn in the year? Is the primary?
If they're both covering children, I don't know the answer to that question. And I don't know how
Yeah, I think
it
it is.
looks.
Okay.
It's a good question.
You always have to check that out when you hire somebody, make sure
Mhm.
that they're not the youngest in the family.
Interesting.
Alice, looks like you have one parting.
Yeah.
I did have, this doesn't have anything to do with healthcare reform, but I've been practicing for 25 years and I've never seen employee benefits in the news like they are right now. Besides healthcare reform, we had the DOMA decision from the Supreme Court at the end of June, and so be watching for that. I think that's actually going to make things easier in Iowa, since Iowa does recognize same-sex marriage. But this will affect your benefit plans, and you may or may not need amendments. You will need to change some of your procedures, but just keep in mind that given that decision, now the state and federal tax treatment will be the same, and your employees, same-sex spouses, will be treated the same for benefit purposes as the other spouses. And, maybe we can get something on the website. And there's no guidance, there are questions about retroactivity, there are all kinds of questions, but just keep in mind that that is a significant decision, but I think in Iowa will ultimately make things easier. It's just always the transition is the tricky part a lot of times.
Yeah, we'll get something done on that. Anything else from anybody? They will be around, so if you've got, questions you wanna ask them directly, I'm sure they'll be around for just a few minutes. Sean, anything?
I was just gonna make that comment, and Lisa and ABI, and in the materials, I think you'll find all of our contact information as well, if you wanna give us a call.
These guys are on it, so great resources, and feel free to contact them. Their contact information is all over, like you said. So if something didn't get answered, please let us know. And usually, if you're gonna ask it, there are 10 other people in line wanting the same answer, so please do. Thank you so much for your time.